So this trend to hike, is that the new wave that's happening across Africa? It's not happening in South Africa yet.
Hi, Lerato. Yeah, I think it's a trend where we're going to see the central banks looking at how best to defend their fiscal policies, how best to defend their currencies. I've been listening to a lot of the talk about the Kenyan Central Bank, and they certainly shocked a lot of us. Interesting that someone would say that the stable doors open, the horses bolted. I suppose they're now at least looking for the horse. So that's the good thing.
But is it going to help this 11% interest rate? Is it going to help support the shilling that's really been battered? It's lost 25% of its value already.
I think what they've done is too late to defend the currency. I think it's a welcome thing they've done. Will it defend the currency? I think if we look at where the currency is now, anything that could help it needs to be done. The key thing is that they're going to make the funding of a short Kenya position expensive, which is something they should have done a long time ago. I think most of the market would agree on this. So it's a good thing to try and defend it. Is it defendable? Yeah. A lot of it depends on what's happening in Europe. A lot of it depends on what's happening on emerging markets. But I foresee this, and I differ slightly with our research guys back at RMB, but I think that there is a chance that this could help the currency, and I would expect the currency to trade back below 100.
And how's it going to help inflation? It's over 17% already.
I think this is the key driver for them. Leaving it at 7% would definitely not help inflation. Yeah. Do nothing to attack inflation. A hike of 400 basis points does something to look at inflation. So I believe that they need a firmer currency to help them. I think they need some help on the inflation front, and possibly by making it expensive to be short Kenyan shillings. Maybe through this we could then see a slightly stronger shilling, which would help.
The big issue is the amount of shillings that are in circulation. The number is over 130 billion Kenyan shillings. The central bank has to come in, mop up that liquidity. But is there enough in their war chest at this moment? Is there enough that they've accumulated in reserves to start selling dollars and be active in the market?
I don't believe they have enough in reserves to start defending the currency that way and mop it up. I believe they've got to look at other measures. I think that they are approaching a point where people are going to say, what have they got left as far as ammunition goes to try and defend the currency, to mop up this liquidity. I think they certainly need to be focusing on it. They've got to drain the liquidity from the market. They've got to make it to a point where people think twice about being short Kenyan shillings. There's rumors of large positions out there, of guys running big long dollar positions in the Kenya, not necessarily the local banks, possibly from offshore. They need to look at these and say, how do they do it? I think the key thing that they've got to do, which I think the Kenyan Central Bank has failed, is to not treat the interbank market locally as an enemy, but to sit down at a round table, discuss with them ways that they can do it. Don't try and actually look at the interbank.
Let's head over into neighboring Uganda. A hike there as well, quite significant, from 16% in September to 20%. Now, this shilling has been significantly depreciated, and we know that their bank has been talking about inflation targeting in the recent past. What do you make of the efforts there?
I suppose one's focus has been on Kenya for a long time now, and what's happening in Uganda is I suppose, largely going unnoticed. That has helped the currency firm slightly. It's helped slow the weakness in the currency. They have tended to intervene, but the intervention policies of the central banks need to move away from a heavy-handed approach to a more controlled approach. I mean, investors aren't looking for a central bank that's going to intervene in a currency when it gets to 2,900 and then drive it down to 2,700 and then tomorrow it's back at 28.5. They're looking for some sort of control around the currency. Stability is the key thing.
Stability has been the key thing in Nigeria, but even a 50 basis point hike 2 weeks ago doesn't seem to be helping the Naira. It's almost at 160 Naira to the dollar. There's some worries now as to what's going on and whether or not the central bank can actually continue defending that currency.
I suppose their situation is slightly different. Again, looking at the oil price, what's oil going to do, the talk of where the oil price is going to head to, I think is the impact on what's happening. If we look at what press statements they're making, they're saying that they will continue to monitor inflation. It's a key objective for them, but they are close to a point where they don't want to use any more reserves to protect the currency. The interest rate policies are almost exhausted. They don't want higher rates anymore. But I'm confident there that they're doing a good job, and I think that they're handling things pretty well there.
We've run out of time, but I just want you to tell us about Ghana a little bit, because there, for the longest time when inflation started affecting Africa, they seem to be on even keel. Not quite so anymore.
Ghana's, again, I think it's around the currency. I think the weaker currency is having a big impact on them. They have intervened in the market to supply some dollars, but dollars only to be sold to the corporates, not to the interbank market. They're concerned about the weaker currency, the impact on inflation. again, I think West Africa's pictures is slightly different at this stage.